The views, comments, and opinions of the following program do not necessarily reflect those of Morris Media Studios, MorrisMediaLive.com, or its affiliates. Listener discretion is advised. Good afternoon, everyone. Hi. I am your host for today's show, Shirley NIchols. I am Shirley NIchols with Clear Sky Mortgage and Realty. I'm a mortgage broker with Clear Sky Mortgage and Realty. And you are tuned in now to Mortgage Money with Shirley, episode 2, Loan Programs. So, a couple weeks ago, we did an episode 1, my debut episode about mortgage matters. So I definitely want to keep you all advised to mortgage matters. But this is episode 2, loan programs. So let's jump into it. Let's jump into all these delicious loan programs that you hear buzzwords about. You hear about FHA, which is a government program. You hear about VA loans, which is a government program. And then you hear about conventional and non-conventional, jumbo, conforming and non-conforming. And you're probably overwhelmed thinking, what do all these loan programs really mean? So let's break them down. Let's talk about the FHA loan first. FHA, government loan. And I will say this, back in the day, they were, a little bit stigmatized. They were, no one does the FHA loan. It's one of those not so good loans. It's for people with poor credit and not a lot of assets and all this other kind of stuff that kind of went behind the stigma of FHA loans. But that's not the case. That is so not the case. Let's dispel that myth and let's talk about the FHA loan. It's a very, very solid, very, very good loan that has been in place for years and years and years. 1940s, 30s, years and years and years and years. Everyone's been doing the FHA loan. It's not a bad loan at all. And a lot of our first-time home buyers, even the seasoned buyers or the people who own homes right now, still do FHA loans. It's a 3.5% down payment. So when you buy your property and you're looking at a property and you're saying, I want to buy that $100,000 house. Guess what? You only need to put down 3.5% or $3,500 as your down payment. Very, very good program for a lot of first-time home buyers. And every now and again, you'll hear real estate agents, but my sellers don't want buyers who have FHA loans. Why not? I ask. And a lot of the reason is because the sellers are just not profound or educated in the FHA loan. Nothing wrong with it. It just gives the buyer other options to buy a property, right? So with FHA, you've got the credit score that needs to be a minimum 620. We have lenders now. Pandemic kicked in, coronavirus kicked in, new guidelines, new stipulations, new conservative guidelines, all that stuff kicked in and ramped up when the COVID hit, right? And they were saying, with FHA, now your credit score needs to be a 640. Well, since numbers are dropping, COVID is kind of, the vaccinations are picking up and it's kind of dwindling down. Now we have lenders that will extend lines of loans to you with a 620 FICO score. Yes, that's right. So if you have a middle FICO score, right? Because we pull 3 bureaus or a tri-merge and we get 3 FICO scores. We don't take the high FICO score. We don't take the low FICO score. We hit you right in the middle and we give you the benefit of the doubt of the middle FICO score. So if your middle FICO score is a 620, you're almost there to be eligible for an FHA loan. But then you need your 3.5% down payment, okay? So that's the FHA loan. Easy, and it gives you options. Nothing wrong with it. Now, with the FHA loan, yes, you will have PMI, private mortgage insurance. That comes with all the FHA loans, okay? If you're not putting down 20% with conventional, you're going to get PMI. If you're not putting 20% down on jumbo loans and whatever else, you're going to get PMI, private mortgage insurance. So it's the same thing with FHA, right? So if you're going to do your 3.5% down payment, 620 FICO score, and you're going to get PMI. Nothing wrong with it. You can refinance out of it later, and we'll talk about that later. But you will have the private mortgage insurance added to your mortgage payment that consists of interest, principal, taxes, insurance, and then you also have the private mortgage insurance. And oftentimes I get questioned, well, there's insurance on my property already. That's right. You have hazard insurance or homeowners insurance. That is definitely mandatory when you're owning a home. It's just like car insurance, except for if you get pulled over with a car and no car insurance, you get ticketed. With a house, well, they just place the insurance on there, and that's very pricey. So mortgage insurance, the PMI, you will have that in your mortgage payment if you have FHA loan program. You'll also have hazard insurance or homeowners insurance. That covers the property, okay? PMI. One thing about PMI, and I get asked that question a lot too, is the PMI, the private mortgage insurance, covers the lender. Has nothing to do with your property, has nothing to do with you, the homeowner. It covers the lender in case you walk away from the property. And we won't do that. So FHA, again, you'll have your principal and interest portion of the payment. You'll have your property tax portion of the payment. You'll have your hazard insurance or homeowners insurance. And you'll also have your PMI, your private mortgage insurance. And all that goes into the FHA loan program. Okay. And again, don't get caught up on that PMI because you'll have it too if you're doing conventional lending. Okay. So let's talk about the other government loan that's very prevalent. Let's talk about the VA. Okay. If you're a veteran, and you have your DD-214, that's a form that says, hey, you're eligible to go and buy a property and you get up to 100% financing. With VA, you don't have to have a down payment. Imagine that. Yeah. So you see this property at $100,000 sales price and you say, I want that property. No down payment. Let's get started, okay? And with VA, the credit scores are a little bit different. You can actually have a 610. Some lenders, very few lenders will lend on 600 scores. Like I said, back in the day, prior to the COVID, Corona, back years ago, because it seems like years ago, right? But years ago, yes, we did have lending for VA, and you can be in a 500 credit score, 525, 530, back in the day. But now you're looking at 605, 600 with some lenders on VA, okay? So you can get eligible as long as that middle FICO score is in the 600 with the VA. So not a whole lot that goes with VA. You need to be a veteran. You need to have your DD-214 form that tells you tells you that you're eligible for a VA loan. And then there's other things that go along with the qualifications. But again, the VA is very specific and it gives you, again, other options, right? And you may, once again, hear a real estate agent say, I don't want to work with the person that has VA lending. Why? Again, I ask, because the seller may or may not be educated in VA or FHA or government loans. Nothing wrong with them, but they just provide more options for the buyer. And then, of course, we can talk about conventional and jumbo and non-jumbo loans. Those are your standard loans, okay, that you will tend to put 5% down in most cases. Now, I bring up that 5% down payment in most cases because there are lenders now that are back in the swing of first-time home buyer programs, first-time home buyer options. They're back on the table now, a little bit more prevalent, right? And again, I pick up this stigma about, the COVID and coronavirus and all that. The reason why I keep mentioning that is because true, very true facts. Most lenders tightened up their guidelines, tightened up the reins on what we can lend, who's eligible, who's qualified. They tightened them up. A lot of the reason why is because those rates dropped. Interest rates dropped. They are very low, very good. And I tell you, it brought about some more changes. The interest rates dropped, and then a lot of people, unfortunately, were losing their jobs, right? And a lot of home buyers couldn't really afford to buy what they once thought they wanted to buy, right? A lot of homeowners couldn't really refinance because, again, lost wages or income cut in half. That gave them another tier, another layer of where they could actually afford to either buy or refinance. So that's why I keep bringing the coronavirus business up, because our guidelines tightened up. As a mortgage broker working with lenders, we saw across the board, everything started tightening, right? So now that the vaccinations are picking up and the numbers are starting to drop in some areas, the guidelines are starting to loosen back up again, right? So the first-time home buyer programs are starting now to come back around, and they're becoming more popular, I should say, they're becoming more popular with a lot of more lenders. There's a lender that I deal with that has a program that's called Home One. Home One, brilliant program for first-time home buyers. Now, first-time home buyer. Oh, I just graduated from college. I've got a slew of student loans. Oh my gosh, what am I going to do, Shirley? You're going to call me. You're going to call me, and we're going to walk through your credit report, and we're going to see what those student loans look like. Primarily because the Home One program actually gives you an advantage if you are a student. If you're a student that just graduated and you're now into your career, you've got that employment contract that says Sally or John they're going to start working with ABC company and they're going to make $100,000 a year. You've got that employment contract and you're ready to go. But you're also thinking that, I don't know my credit because I've got all these student loans. Here's where I'm saying that you guys have a little bit more of an advantage as a first-time home buyer, even if you have student loans. My debut program, episode 1, Mortgage Matters, I talked a lot about student loans and that whole stigma behind student loans. Well, in episode 2, right now, we're talking about loan programs, right? And with this loan program, it's called Home One. Now, call me so we can discuss it, because I don't want you going and calling B of A or Wells Fargo or Citibank or whomever saying, hey, I heard you guys got this Home One. Okay, so they're going to probably say, what are you talking about? Right? I used to, just to kind of give you a little backstory on myself. So I come from a company called Household Finance, way back in the 90s, right? I've been mortgage lending for 27 plus years as a loan officer, account executive, on up to a mortgage broker. Been doing this for 27 years plus. Got my start with Household Finance Corporation back in the late 90s. And I shouldn't say the late 90s. It's more like the mid 90s, okay? Graduated from the University of Missouri, Columbia in 94. Went on to get my master's in 95, my MBA in 95. So I've been at Household Finance about, the summer of 94 when I graduated from college. So as you can see, I've been around this business for quite some time. So I say that to say this. Come from Household Finance, moved on to Wells Fargo that's where I would say the bulk of my career has been, about 12 and a half years with Wells Fargo. And I even worked with Citibank for a few years as well. The reason why I say you don't want to call up these lenders and say, hey, Shirley with Mortgage Money says that you guys do this Home One program. It is not for the major banks. It's on the broker side, the wholesale side of lending, right? There is a program with the lender that I work with. And just to kind of give you guys another piece of this whole Mortgage Matters business, with banks, they're mortgage banks, right? And they're not even mortgage banks. They're just banks that do mortgage lending as one section of their industry, right? So that's the Wells Fargos, B of A's, Citibanks, Chase Bank, okay? They are a huge banking industry. And in one segment of that industry, they do mortgages, right? And they are fixated and adhere to their regulations of the bank, okay? So that's the bank. And then you have mortgage banks, and that's what I deal with. I deal with the mortgage banks, or the lenders that deal with strictly mortgages. That's it. They don't do checking and savings accounts. They don't do any IRAs. They don't do any CDs. They don't do any of that stuff. They just deal strictly with mortgages. They're the mortgage banks. That's the broker. That's the wholesale side, okay? So the wholesale side, They have many programs that they can disperse, that they can offer you. Okay, they can offer many programs on the mortgage banking side. On the side with the big banks, they offer what they have, and they're standard. They're the VA loans, they're the FHA, the government loans. And some of the banks, I will say this, some of the larger banks like Chase, sorry, Chase, but I know firsthand, Chase, their FHA rates may be a little bit steeper, only because the banks really want to deal with conventional and non-conventional stuff, and more so just conventional, straight across the board. Because again, just like on the mortgage broker side, their guidelines tightened up too. So on the bank side, they deal strictly with their stuff. And then on the mortgage broker side, we deal with our stuff. And there's often, like I said, there's so many programs that they can offer because they deal strictly with mortgages. And back in the day, I remember when I got started, I started at the big banks, Household Finance, Wells Fargo, Citibank. I started over there because all I heard was mortgage brokers are just, oh, no, you don't want to do the mortgage broker thing. You don't want to do the mortgage banking thing. In all actuality, I transitioned over to the mortgage banking side because it is a more nichier, has more options, has more flexibility than the big banks. And there's nothing wrong with it. Nothing wrong with it. Everyone has their preference. Some people wanted to work with the big banks. That's where I got my start. That's what I did. Worked with the big banks. And then there's other people that want to work strictly with the brokers. Preference is yours, but I will say this. Having been on both sides of the playing field, yeah, I'll stay on the wholesale side, on the mortgage broker side, because there's just more options. And like I was saying, back to the Home One program, again, a first-time home buyer program. No specific demographics are necessary. You don't have to buy in a certain zip code. You don't have to have a certain amount of assets, Depending on the loan size that you want, depending on the sale of the property, the sales price, depending on all of that, that will determine how much you'll need in assets or reserves. But there is no, oh, you have to buy in this certain zip code, or, oh, you have to fit this income category. A lot of the down payment assistance programs, let me say that again, a lot of the down payment assistance programs, those are different from a first-time home buyer, okay? So let's don't get the two confused. Oftentimes I'll have someone call and say, hey, Shirley, do you offer any of those DBA loans or any of those down payment assistance loans? And I'll talk to them very briefly about the down payment assistance program, but more so, they're really asking me about the first-time home buyer programs. The first-time home buyer programs, like I said, they're coming back around. Okay? With the first-time home buyer program, it opens it up a little bit, opens up the playing field a little bit larger so that you're not pigeonholed in a certain zip code, a certain income level. You're not really capped at those levels. First-time home buyer program that I deal with a certain lender, we are under the Home One program, where not only do you have a little bit more of an advantage if you have student loans, but guess what? 3% down payment. 3% down payment. So that's even cheaper than the FHA government loan, right? So FHA, if you recall, we talked about 3.5% down payment. However, with Home One, the down payment, 3%. Beautiful, right? And you're not pigeonholed in a certain category, okay? Oh, let me go ahead and plug in this. I forgot to give you guys the call-in number for today, area code 323-815-4204. I forgot to say that in the beginning. I'm here live and direct at Morris Media Studios here in Los Angeles. Again, I'm your girl, Shirley NIchols. I am with Clear Sky Mortgage and Realty here in Los Angeles, and you're tuned in to You're tuned in to Mortgage Money with Shirley, and this is episode 2. And believe it or not, episode 2, we're off to a bang. We had episode 1 a few weeks ago. So every Wednesday, first Wednesday, and every third Wednesday, I'll be coming to you all live and direct. I know today is Tuesday, but something came up for tomorrow. So we're here today on Tuesday. So every first and third Wednesday, we will be here and live and direct at the Morris Media Studios here in Los Angeles, okay? So please tune in, and if you have any questions, call in area code 323-815-4204. 4204. Again, you're on with Shirley NIchols with Clear Sky Mortgage and Realty with Mortgage Money with Shirley, episode 2, loan programs. Forgot to give you guys that phone number in the beginning. So feel free to go ahead and call in if you have any comments, questions, or concerns, or you can leave the comments, questions, or concerns right here on the Facebook page, because I will be looking at these comments, and I see a couple of viewers on. So again, if you have any comments, questions, or concerns, go ahead, feel free, look at the comments. At the end of this segment, I will go ahead and address those comments, questions, or concerns, or if you call in, I'll try to get right back to you, okay? Again, you're on live live with Mortgage Money with Shirley. Okay, episode 2. All right, so let's go ahead and get back into what we were discussing. Home one, okay, first time home buyer programs. Home one. Excuse me. So call me if you have any questions, and we'll discuss about how do you get qualified or eligible. And it's never too late, right? I get asked that question too. Am I too old? Am I too late to get in on buying a house, owning a house? No, there is no age discrimination on buying a property. None. You can start today. And it's something real interesting or exciting, I should say. You know, I watched the Tina Turner documentary on HBO over the weekend. I don't know. I tell you all, I love me some Tina Turner. I love me some Tina Turner. And the only reason why I'm bringing this up right now is because the whole stigma about, oh, I'm too old to fall in love or get married or buy a house. Okay? You know, we're looking at Tina Turner's documentary. She was 77 and married what she deems her true love. 77 years old. And got married. And guess what? They have a beautiful home, a beautiful property in Switzerland. Yes, her and her husband. Isn't that something? So it's never too old to do anything that you want to do in life, okay? You just have to get to it. And then you have to call me. And then I'll walk you through how you're eligible and what your qualifications are. Because even if you're on a fixed income, and I get asked this question a lot too, even if you're on a fixed income, guess what? That income is still money. You can still qualify. You can still be eligible to buy a property, even on fixed income. Well, I'm retired and I have a retirement pension and I've got a little bit of Social Security. You'll be amazed at how far a little bit of Social Security and retirement pension goes. Okay? So don't get caught up in, well, I've never owned a home and, oh, now I'm retired. Guess what? There's a first-time home buyer program for you. Okay? Just call me and we'll discuss and talk about it. So we talked about the loan programs, right? I do want to get into a little bit of cash out and rate and term. Okay? So we talked about FHA, right? We talked about VA loans. Those are the two prevalent, most popular. Oh, and someone's calling in right now. We'll just get back to that person. Those are the two most popular government loan programs, right? And then we have your conventional loan. And let's talk about that real briefly. Conventional lending, again, 5% down payment. Now, funny that I said 3% because there are some lenders out there, when you're buying a home, will let you do that 3% down payment. And you don't have to be on the first time home buyer path. You don't have to use Home One, but there are other programs that will allow you to do that 3% down payment. Now, I know I get questions about this all the time too. Shirley, I don't have the 3%. I don't have the 3.5%. Look around for your resources, okay? Right? Look around for your resources. You can get a gift, right? Gifts are still optional. You know, a gift from your parents, relatives. You can get gifts, and they have to be that. It can't be a loan, right? Gifts from your family, relatives, or what a lot of people don't consider is if you have a 401k or any retirement program that you can physically call them on the phone and say, hey, listen, I am trying to buy a property. Here's my pre-approval. Here's my loan estimate. Here's how much money I'll need. You can actually borrow against your 401k or just take it out of what they call a hardship, right? I know it sounds kind of crazy. Why would they call buying a house a hardship? But that's their option, and those are some of those terms that some of these 401k or retirement plans use. Don't know why, but trust, those options tend to be available when a lot of clients don't realize that they have those options available, okay? So don't be so quick to say, oh my gosh, I don't have my down payment monies. Look around. You might have some resources that you didn't even think about, okay? So going back to, like I said, Tina Turner and this whole fabulous house and this whole life, she started at 77. And again, with retirement monies and Social Security monies, all that stuff can be utilized. There's also a reverse mortgage program, okay? Reverse mortgage program, you do have to be 62 years of age, okay? So call me. I do plenty of reverse mortgage loans, and you can use those to buy a property. A lot of my reverse loan program candidates or clients tend to be the ones that want to refinance out of the mortgage that they're in and live comfortably without making a mortgage payment on their property. They're responsible for the property taxes and the homeowner's insurance, yes, but the mortgage payment, that is wiped out with the lender. And I shouldn't say wiped out because trust me, it's still there. It's just that they're not making a mortgage payment every month with a reverse mortgage. And you can use that program to buy a house. So again, you're never too old. Maybe you're not old enough. You have to be 62 to use the reverse mortgage program, okay? Now, going back to the conventional side of things, and even with FHA, let's talk about what I mentioned, cash out loans and rate and term, okay? Two of the, again, most utilized programs within the program, okay? You can do a rate and term when you're refinancing. These are for people who already own their homes, already have mortgages, okay? Once you become a homeowner and you decide, oh, I had an FHA loan when I bought my property a year ago, but I live in Southern California, Los Angeles County, and these values are going up. So I bought my property a year ago, and I did FHA lending. Again, nothing wrong with that. I did FHA lending, and I got that private mortgage insurance. Surely I have PMI on my mortgage. And I say, here it is a year later. Okay, well, let's check the value. Let's check those comparables in your area to see what the value of the property is right now. Because maybe, if you think back to what I said in the beginning of the segment, I said PMI happens when you don't have 20% worth of equity on the conventional side. PMI is going to happen regardless if you're dealing with FHA. But if you're wanting to refinance out of your FHA, right now is a very good time to do that. Values are up, interest rates are down here in Los Angeles, and this is by far the greatest time to refinance out of, if you want, your FHA or your PMI situation, right? So conventional refinancing, you call me and say, hey, Shirley, I want to get rid of that PMI. I want to get rid of that private mortgage insurance because I know my value is up. So the first thing I'll say is, okay, what's your address, Sally or George? What's your address? Oh, it's 123 Main Street. Okay, let's see what the value looks like. Oh, you did buy it a year ago and it was worth $100,000. And now here it is a year later and it's worth $150,000. I'm going to say, congratulations. Let's go ahead and pull some credit. Let's get into a credit application and get you qualified to get you out of that private mortgage insurance. Because the thing about private mortgage insurance, like I said, whether it's a government loan, FHA, or whether it's conventional, if you don't have that 20% down payment, the thing about PMI or private mortgage insurance is very true. It has nothing to do with you, the homeowner, has everything to do for the lender. It protects the lender, right? So a lot of clients want to refinance out of that. And there's nothing wrong with that. As long as you've got the equity to do it, let's do it. Interest rates are super low right now and the values are going up. So give me a call and let's get you out of that. Just refinancing simply what is owed on the mortgage balance, that is called a rate and term. That's it. All you're doing is just pretty much paper switching, right? Paper flopping. You're going to take one FHA or a conventional loan with PMI, and you're going to move it over to a conventional loan without PMI, right? And then you're going to have a brand new loan number, a new payment, which is going to be lower because the PMI is gone. And now you've got yourself a rate and term refinance, or what we call, an R&T. That's it. Now, cash out is different. Cash out, you can borrow against that equity. Yes, you can borrow against what you have amassed. So if you Want to get out of the PMI? No problem. But if you have enough equity to not only get out of that PMI, but take the equity that's from not having the PMI up to 80% loan to value, you can use that cash, put it in your pocket, or pay off some bills, or build a swimming pool, or go on vacation, or whatever you want to do, right? That's called a cash out loan. Nothing wrong with doing that either. But again, the main thing is you want to stick to having 20% worth of equity to get rid of the PMI or the private mortgage insurance. And we call that loan to value, LTV, is up to 80%. That's a beautiful thing. So again, we're getting close to the end of my segment. I do want to say I thank you all so much for joining in today's segment. I will be here, like I said, every first and third Wednesday. I know today is Tuesday, but we got something to do on Wednesday. So every first and third Wednesday, we will be right here at Morris Media Studios here in Los Angeles, streaming live on both my Facebook page and with Morris Media Studios on YouTube. And you can always call in while we're doing these segments at area code 323-815-4204, 323-815-4204, or you can leave your comments, questions, or concerns right here on the Facebook page, and I will get back to those comments as quickly as I can. But other than that, any questions that you have for me now, I'll love to take those questions. But every episode will be a new topic. And today, episode 2, loan programs. I thank you all so much for tuning in. And trust, we can go on and on and on about this mortgage business. But we're here every Wednesday, first Wednesday and third Wednesday for about 30 minutes. So other than that, I'm your girl, Shirley NIchols, and we'll stick around for a little bit. Let's see if we have any comments right now. Checking. Okay. But again, if you have any other questions, like I said, there's so much about this mortgage business that I love and I want to share it with you. So again, Shirley NIchols, and I'll even give you my cell phone number. It's area code 818-720-7575. Again, you can reach me anytime and I'll hopefully get right back to you. Okay. Mortgage Money with Shirley, our podcast. Thank you so much.